It's time for the Savvy Realtor Podcast. I'm Walter Storholt alongside Angie Cole, the owner and broker in charge of A. Cole Realty, serving you throughout the Triangle, teaching you about the ins and outs when it comes to buying or selling a home. You can find the team online by going to acolerealty.com. That's A-C-O-L-E realty.com, or by calling 919-578-3128. That's 919-578-3128. And now it's time for one of the top realtors in the Triangle, Angie Cole, and the Savvy Realtor Podcast. A lot of the time, I know, Angie, you're spending busting myths about the real estate world. People kind of come in with preconceived notions. I'm sure all the time you're like, well, actually, you might get annoyed by saying, well, actually, all the time. Well, actually, we want to do this. I think a lot of people get surprised, right?
Yeah, all of the time. Or also just setting expectations, too, especially with the market that we're in, setting those expectations. Travis had a great question earlier about, as soon as a home hits the market, they're gone.
Right.
Which he's right in some cases. So setting expectations of, hey, we need to move quickly. We might need to make an offer above list price. You might not be able to negotiate, but I know you're about to go into some other myths that we commonly hear, which can scare people away, and it's not always as hard to buy a home as what some people feel. And I actually, this is not off the topic, but just something random that I read an article about recently. And I think the information maybe came from Zillow or Trulia, but they say that millennials will spend, on average, $100,000 in rent by the time that they reach the age 30.
Wow.
Isn't that crazy?
That is pretty crazy.
And so, you think
$100,000.
$100,000. And I say that because it's going to kind of go hand in hand with what we're about to talk about and mortgages and whatnot. But that seems unreal. But my husband and I were talking about it, and we did the math. And, that is 100% true. If you even go from 18 to 30 on average, and I think we did like $1,000 a month for the rent, which in many areas rent is a lot more than that.
Sure.
And that puts you at, I think, $120,000. So, that's actually, I think, based off of going from 18 to 30, maybe $800 a month or so. Don't, quote me on that, but it was amazing to see that people spend on average $100,000 towards rent. You don't own anything. It's not going towards anything, right? And then I
just did the math. I was $45,000.
You were $45,000?
Approximately.
Yeah.
I'm just doing rough math here.
And if you do
But if you combine my wife's, rent into that, which she then separately paid.
Yeah.
Compared to now both having a home and paying on a mortgage, it's crazy.
And so if you do, for example, if someone spends even like $800 a month, say in rent.
I did mine on $750.
So, and you can't find that in this market anymore.
We lived in really cheap apartments.
Yeah. If you even do $800 a month times 12, and then 12 years from, say, 18 years old to 30, right there you're looking at $115,000.
Wow. That's
spent.
Crazy. And that's not even for probably a nice apartment. That's trying to find an apartment, say in like the Raleigh, some better quality. I know they're now going for $1,200 and plus to even find something decent where you feel safe. So that's crazy. Mine was literally I think 489 square feet. It was a small little place.
That's okay. Nothing wrong with that. Nothing wrong with that at all.
Yeah.
But the average person spends $100,000 towards the rent. So just think about those monies that you're spending and what we could do with that as far as your mortgage and down payment and applying that towards a home.
Yeah, that's a great point to make. So again, preconceived notions, myths, those kinds of things I think are all important to kind of bracket this conversation with. And so what we're talking about today, a little bit more specific when it comes to myths, we're going to talk about down payment myths. These are things that people tend to believe, and they're not necessarily true or correct. And I think this will lead to some good discussion. So, Angie, one top myth that I've seen out there is that you need at least 10 to 20% for a down payment in order to buy a home. That's obviously false. There's tons of different ways that you can utilize that down payment. Right?
100% false. On average, I would say people that we're working with, I tend to see maybe 3.5% to 5% as far as a down payment. But there are so many different style of loans out there which are 100% financing. So, 100% financing through State Employees Credit Union, USDA for, more rural areas, and then also those that are VA eligible. That's 100% financing as well. So a 10 to 20% down payment is not as common as what, one might think. And many are putting much, much lower down. So that just opens up that there's, so much opportunity for everyone to buy these days. You don't need that 10 to 20% saved up in order to make a home purchase.
Right. Now, the reason that people maybe have subscribed to this thinking, and I think we should recognize this, there are certainly benefits to having a higher down payment. It's going to lower your mortgage costs. You may not have to pay the different insurance premiums, some of those kinds of things, right?
Sure. Yeah. The norm is they say once you have 20% invested into the home, you no longer have to pay that mortgage insurance. So that will cut down on your overall mortgage payment. But yes, the more money you put down, more than likely, the better interest rate you probably will receive. And so the lower your mortgage payment will be. But I'm also a lot of times pleasantly surprised, kind of comparing apples to apples. Have your mortgage lender do a good faith estimate for you and compare, okay, what is the difference of putting 5% down versus 10%? Sometimes the difference in your mortgage payment is not that much of a difference to where it makes sense to put that additional 5% down. Maybe it's best to put that into reserves and savings. Maybe you want to use it towards furniture or whatever it might be. But have your lender really run the numbers for you on the exact same home or price point, with the differences of putting, this amount down versus this amount. Also, the structure of the loan. I sometimes see that actually an FHA loan can make up for a lower mortgage payment versus a conventional loan, where some people would think it would be the opposite. So have your lender run the numbers to figure out, what setup and scenario is best for you. And if truly putting more money down for your down payment is going to really make that huge of a difference instead of, putting some of that back into reserves or savings.
Yeah. Another great tip for you, and this is another myth that is often believed about down payments, is that low down payment programs are only for first-time home buyers. I'll say they get a lot of the press, but that doesn't mean that they're the only ones who can benefit from, buying programs and that kind of thing.
Yeah, not true at all. And remember, what qualifies a person as a first-time home buyer is not that, hey, it's your first time buying a home, but it's your primary residence.
Okay.
So that can be a big difference there, too. It's just saying that, this is not for an investment property. And so one of the most commonly known down payment program assistance mortgages out there is called the Down Payment Assistance Program, which is through the NC Housing Financing Agency. This can be used for both a conventional or an FHA loan, which can cover your down payment and also some closing costs. Some of the misconceptions, though, out there, and it sometimes can scare people away, but it really shouldn't, is although you're getting this down payment assistance, you do need to pay this money back. Okay. But the only way you pay it back is out of the net appreciation. So, for example, if you go to sell your home, you then will need to pay back the assistance that you received with any type of appreciation you made off your home, less the real estate commissions as well. And so based on how long you've lived in the home will determine what portion needs to be paid back. But the thing is this is kind of like a loan. So it's no difference than you obtaining financing for your home. The great thing about this is it will not accumulate interest. So although with a loan, you're getting a loan, maybe 100% financing, you're paying the additional interest. A lot of times when you make your mortgage payments, most of it's going towards interest in the beginning. With the down payment assistance, you're getting kind of like this free money and you're not paying interest on it. So yes, in the long run, do you have to pay it back? Yes, but you're not paying interest on it. And once again, if your home doesn't appreciate and maybe you take a loss on your home, you don't, on top of that, also have to pay this money back. And, a lender definitely can give you some further guidance on that just to clearly and understand, all of the basis and the specifics of this loan program. But this is, a program I'm seeing a lot take advantage, or a lot of buyers take advantage of.
Absolutely. If you have any questions about buying or selling a home here in the Triangle, particularly if it comes to, you're looking to buy and you're kind of wondering what kind of help can you get, especially when it comes to down payment situations and the like, we invite you to call or text Angie at 919-538-6477. She can help answer your questions, make sure that you're on the right track when it comes to buying or selling a home. Make sure that you have the questions that are on your mind answered. 919-538-6477. Call or text that number to reach Angie. That's 919-538-6477. We're talking about some of the top down payment myths that we've seen. And another one, Angie, is that it's difficult to qualify for down payment assistance.
Not necessarily true. There are certain restrictions, which all types of loans have restrictions. For the down payment assistance program I just mentioned through the NC Housing Finance and Agency, they do require a 43% max debt to income ratio. They do require a 640 credit score and not flexible on that at all. I know that there are some other loan programs where you can go lower, as low as maybe even 580. But this one does require a 640 credit score. And then also there is a max income limit, based on the county that you live in. So yes, there's qualifications, but they're not extreme. So, a lot of people qualify for the down payment assistance program and can be pleasantly surprised.
Yep, absolutely. So again, not as difficult as some often believe. Last but not least, one other down payment myth that's out there is that you can't use gifts, grants, or loans for your down payment. You already busted kind of the loan one for this example, but a lot of people think that these aren't possible when they are in reality.
Yeah, most definitely. You mentioned gifts. So, a gift can be given from an immediate family member. There's typically a template letter that the lender will send over to be completed. That states that there will be no repayment of this gift. It's truly a gift. But yeah, gifts can definitely be used for both down payments and for closing costs. Also, whoever is gifting that money will need to show the availability and ability to give the monies.
Okay.
For example, just like when you are obtaining financing, you have to show your bank statements,
right,
how certain monies got into your account. Same goes for this money that's being gifted. If all of a sudden we see $50,000 deposited into your immediate family members, maybe your, uncle's account, and that's the money he's going to use, well, they're going to say, how did you get that $50,000,
gotcha,
right? So they have to show, a pattern and a track record of exactly where all monies are coming from. Another down payment assistance program that's not as common just because they do tend to run out of money, but it's called City of Raleigh, where they have up to $20,000 of down payment assistance to give. We do see that this one is a little bit more strict on the guidelines in order to qualify, and typically they run out pretty quick every year. So, every year it's like the program restarts and they can run out of the assistance money to give. But yeah, definitely, gifts can be given. You can receive grants, also, different types of loan structures for that down payment assistance in order to help you qualify for a loan.
Absolutely. So lots of different moving pieces when it comes to loans and mortgages and that kind of thing. And this is why you and Ned Ligon have put together a great app for people to learn more about kind of that mortgage process. And it can help answer some of these types of questions.
Yeah, most definitely. Ned, of course, always helps me whenever we have these specific questions about, mortgages and down payment. I love to pick his brain on it, and I always learn something new when chatting with him. But if you are thinking about buying a home and you want to speak further with a lender, you want to talk more through the different down payment assistance programs, the different types of loans and programs out there to see if you can qualify for a loan, I would love to connect you with Ned Ligon with Movement Mortgage. And he has a really cool app that you can download to your smartphone. From there, you can get pre-qualified. You can look at current interest rates, and then, of course, ask him questions and connect with Ned. And so to download the mortgage app to your smartphone, text the word lending to the phone number 555-888. Once again, on your smartphone, just text to the number 555-888. In the text box, you're going to text lending. And from there, a link will be sent to you. Click the link, and it will take you to either your Google Store, is that what it's called?
Yeah,
or
the Google Play.
The Google Play or the Apple Store.
It'll download the app.
It will download it for you. And once again, it's just a really neat tool. And you can also look at your payments, as well. So lots to do on the app. And then it's a great starting point to get pre-qualified because that's the number one step with buying a home.
Calculators, all that kind of stuff too.
Yeah.
Lending, that's the word that you text to the number 555-888. Again, just text the word lending to 555-888 to download that great mortgage app. This has been The Savvy Realtor. Thank you so much for tuning in today. Lots of great questions from listeners. Also, some really good topics and information from Angie and her team. Thanks to all the other guests for joining us today as well. One more time, if you have questions about buying or selling a home, it pays to have somebody on your side, an expert here in the Triangle who can walk you through all the nuances. It's such a competitive market right now. You've got to make the right choices when it comes to buying and selling your home. If you'd like to tap into that expertise that Angie and her team have here in the Triangle, all you have to do is call or text Angie directly to start the conversation. 919-538-6477 is the number to call or text to reach her directly. That's 919-538-6477, 919-538-6477. Angie, thanks for your time this week. We'll see you next week.
Yes, that was wonderful. Thank you so much.
You've been listening to the Savvy Realtor podcast. I'm Walter Storholt alongside Angie Cole. She's the owner and broker in charge of A. Cole Realty here in the Triangle. And if you have questions for Angie, we invite you to go online to acolerealty.com. Listen to past podcast episodes on the website, read the blog, and all the great information, including the option to find a home right there on the website. That's acolerealty.com. And you can also call Angie with your questions, 919-578-3128.